I'm Paul Schrader. I'm Executive Director of the Consumer Assistance Council. We're located in Hyannis, and we work with the Attorney General's Office to provide consumers with information and mediate complaints. Today, we want to share with you information about reverse mortgages for senior citizens. You can contact us if you have any questions at 508-771-0700. Hope this is helpful for you. What is a reverse mortgage? It is a mortgage like a regular mortgage legally, but unlike a regular mortgage, which starts with a large amount of money that is reduced by payments over time, a reverse mortgage makes payments to you over time, and the balance builds, not declines. Reverse mortgages are appropriate for older people who need extra money to stay in their homes and are willing to use their equity to get that money. For some people, reverse mortgages can be a lifesaver, but for others, they are a mistake. And in some cases, they are part of what is essentially a scam. We will go over examples of each situation.
To introduce our panelists, Jan Timmons is Director of the Sandwich Council on Aging. Jan will moderate our session on reverse mortgages, and our guest experts are Len Raymond, President and founder of HOME, Home Ownership Options for Massachusetts Elders; Tom Kosman, Attorney at Law with South Coastal Counties Legal Services.
Our first example of someone who might qualify for a reverse mortgage is a 77-year-old woman we'll call Ms. Jones. She is a widow whose only income is $15,000 a year from Social Security. Her expenses are running about $25,000 a year. She has been covering the extra $10,000 from her savings, but that is almost gone, and she will soon be running about $800 a month short.
I own my own home, which is assessed for approximately $300,000. I don't have a mortgage, and I have no other debt. I'd like to stay in my home as long as I can. Am I a good candidate for a reverse mortgage? And if so, what would be the difference for me if I get a term reverse mortgage through HOME or one of the advertised type on TV that are insured by HUD?
Okay, in response to that, HOME's position is going to be perhaps a reverse mortgage would be appropriate for you, but what we want to do is a real, very strong in-home comprehensive analysis of your situation first and foremost. There are other options and alternatives out there, particularly if we could cobble together several no-cost, low-cost programs: fuel assistance, energy assistance, prescription help. If you need perhaps home repairs there to go in that direction with deferred loans, or perhaps a grant. And certainly to look at things like property tax relief and utility help, et cetera. If, after finishing a thorough examination of that, and also, this is the key element here, looking into what your real desires are long-term, what's your plans. Then perhaps you can begin at the end of the process of looking at, okay, let's look at a reverse mortgage as perhaps one of those options that you could choose. The difference between the two reverse mortgages here are primarily one of costs and an ingredient which is often not brought forward, and that is, I would say, how fast is that equity going to be depleted? How fast is it going to be used up? And that goes again back to the whole issue of what your long-term plans are. Would you like to have an equity cushion? Would you like to have something that's going to assist you in terms of increased costs in the future, healthcare costs, home repairs, et cetera? And goodness, if you do have to make a transition from the house, either on an unanticipated basis, unplanned, or a planned one, you want to do that with having an equity cushion at the same time. Certainly a term reverse mortgage, which would have a maximum term of, let's say, approximately 12 to 15 years, could serve you very well. It could provide you, indeed, with perhaps 32 to 34% equity conservation, but you're going to have to make sure you have good, strong plans in terms of what you're going to do the next phase of your life. Where are you going to go? Elderly housing, a retirement home of some sort, perhaps moving in with family members, but having resources to do that with, to really maintain your independence. The long-term open-ended insured reverse mortgage might work as a vehicle as well. That's going to use up a lot more equity faster, and it's going to be much more expensive. It does have a longer tenure or length of time that you can potentially stay there. But again, this has to all go into a mix, and what's going to determine that mix is what your desires, what your needs are, what you anticipate them to be, and where do you want to go in this process? And I would say that, unlike a lot of people, you do have some real resources here, and you have some real options.
Yeah, I mean, I couldn't agree more. I think that I would make just a couple more observations. One, and I think Len would agree with this, that the lifetime reverse mortgages with their substantially greater carrying cost and initial costs, you don't want to be doing it if there's a glimmer of doubt in the back of your mind that you don't want to be here the rest of your life. So one of the first things I ask my clients to do is to take as objective a look as possible at how practical being here the rest of my life is. At 77, you're still out in the fall planting daffodils and getting out the stepladder to clean your eaves troughs. Are you going to want to do that at 90? Will you be able to do that at 90? Maybe so. But you need to talk to somebody who can look at it objectively and help you parse all of the issues, the increased maintenance. Home ownership is a financial burden. Staying there the rest of your life at 77, you're probably going to need another new roof before you're done. You're probably going to have to deal with a furnace and appliances and things like that. You have to allow for all of that. It's maintaining a home on a fixed income, even if you're tapping into it, is not an easy thing.
Not to mind the cost of inflation.
And as your needs increase, 10 years from now, you're hiring people to do stuff that you do for yourself today. So I mean, that's you need to look at how practical is it for me to want to live here. Emotionally, yeah, I want to stay here. How practical is it? And if it is, yeah, there are things to work. Although as I was intimating as my conversation went on, you don't want to, even though you're trying to replace the income that you're needing to supplement your income, you're going to need a reserve, whether it's a line of credit or some reserved equity in a term loan. You can't max out, borrow every possible dollar every month and have it work for the rest of your life. That's almost certainly going to be true.
That's right.
Now we have a couple, Mr. and Mrs. Murphy, ages 68 and 67. They have two incomes from Social Security totaling $35,000 a year and some income from savings of about $5,000 a year. Their house is assessed at $350,000 with a $100,000 mortgage.
We are covering most of our bills, but would like to have some extra money so we don't have to dip into our savings. We'd like to stay in our house as long as possible. Could a reverse mortgage help us?
Well, again, the answer is going to be perhaps, perhaps not. But again, we're going to have to fuel this whole process by, again, an in-depth analysis, which doesn't include fact-finding, what's going on, how did we get, where are we now, and how did we get there, and where do we want to go. I would also want to, be very strong about the importance of things like budget and thrift. And that is, it's almost impossible to contemplate staying for a very long period of time in your house at this stage of your life without thinking of, okay, costs are going up, my income is probably fixed or going down. Are there any ways I can, make this more economical? Can I alter my lifestyle perhaps to fit this in a more appropriate way? To look at that, as well as look at all the potential options in terms of supplements. Again, there's a variety of programs that can do that, and we would encourage everybody to make sure they do that. A surprising one, believe it or not, I'm going to mention two, are property tax relief, and in particular property tax deferrals. It took me some time, almost 20 years, to convince actually a family member recently to look at that. But when that gentleman, that elderly gentleman, looked at the fact that he was saving $7,500 a year that would have gone out the door in terms of his fixed income to pay property taxes, and what that meant to him in terms of his staying power in the house, meant a huge difference. And another relative who took another almost an approximate number of years to convince as well, around, well, not quite as long, around the issue of the circuit breaker. And that's another property tax program in Massachusetts in which people can have a rebate from the Commonwealth of Massachusetts if they fall within certain income guidelines. But what's important with that is that essentially if their costs for water, sewer, and taxes exceed 10% of their income, they can get a rebate on top of that back from the Commonwealth. And we know many clients now, they're getting $600, $700, $800, $900 a year on that basis. So again, just two examples quick in that regard.
Well, just to join Lynn in being something of a wet blanket for you folks, there is no free lunch. And unfortunately, reverse mortgages are being marketed as something resembling a free lunch. It's found money. First thing I noticed in your situation is the reference that you'd like to have some extra money, but you don't want to dip into your savings. Your house is every bit as real in the way of savings as any money you have in the bank. It's not worth more or less, but to the extent that you could argue it would be, it's the better place to have your money as you hit retirement age. 67 and 68, relatively young in the grand scheme of things, but not so young that you can't be thinking about stuff like nursing home placement. And if one of you goes, the concern is how are we going to maintain the other one of you out in the community in a style something resembling what you become accustomed to. Having a home that is not already under the burden of a long-term reverse mortgage where the equity has already been bled out is a real way of supplementing the community spouse's income if and when down the road you run into that. Likewise, your eligibility for assistance programs, even things like deferrals and abatements on your real estate tax, fuel assistance, all those kinds of things, discount the equity you have in your home in terms of achieving your eligibility. So you don't want to be using the house first. In fact, generally you're better off using the house last. It'll be there. Reverse mortgages are still going to be available down the road if you need them. But if you take them now, you're going to hamstring yourselves for all of the surprises that life has in store for you. You've got a long time to go, and you want to be, well, you don't want to be profligate. You have a pretty handsome retirement income by today's standards. You have a fair amount of equity both in the bank and in your home, but you are 67 and 68. You've got a lot of life to provide for yet, and it's probably too early to think you can use the house to golf at Hilton Head.
That's right. And to add to that, I mean, prudent planning is going to say here, and I often encounter this in speaking engagements, what is the single largest, most significant economic event that's in your future? And unfortunately, it's the loss of one of you. So the question is, are you probably kind of taking that into account in terms of this process of planning for the future? And also to remember, again, the very important significance of saving that value of that house, that asset, for as much as possible for the community, the remaining spouse, which would be really important.
Ms. Adams, age 75, has been approached by her investment advisor about an annuity. He says that if she takes out an annuity with his company, she will get a guaranteed monthly income for life. He suggested that she take out as much as she can get from her house using her reverse mortgage and invest it in an annuity. Her house is assessed for $280,000 and has no mortgage.
I have a small income from Social Security and a pension left by my husband totaling about $30,000 a year, and I'm able to meet my bills, but I'm concerned about the future. I like the idea of a guaranteed extra income to give me a little cushion.
Okay. Well, that's, I think we all worry about cushions when our income and outgo are very, very close. Most of America lives one spell of bad luck away from things going to hell in a handbasket. That said, a guaranteed income isn't the best answer to address that concern. The trouble with a guaranteed income is that cash flow wise, you might have a few extra dollars each month, but if you need enough money to put on a new roof or buy a car or go to Florida to see your grandson graduate or any of those things, you're going to need a lump sum of cash. And if you don't structure things properly, it can end up having to borrow money twice. You cash out the reverse mortgage that ticks the rest of your life at pretty substantial rates, and then you have to put it on your credit card, and you say, well, at least I can make the credit card payments because I've got this extra income every month, but you're paying interest again. Not the way to do it. There are things like lines of credit with reverse mortgages that if you're worried about, okay, I'm meeting expenses, but what happens if something breaks or some part of me breaks? What if I'm laid up for a while and I need to hire help? I need to be able to tap in. You're not poor, you're illiquid. owning a paid-for house, you're not at all poor. It's $250,000 more than that in a home. It's the ability to tap it. But you don't have to tap it regularly. There are other products that make a lot more sense. Lines of credit where you don't incur costs until you actually use the money gives you that hedge, but preserves the equity instead of bleeding it out from today where you don't need it against the day when you may down the road. A conventional reverse mortgage. That said, it's also worth noting that this is not an especially good time in our economic history to be cashing out everything and buying guaranteed annuities. Interest rates are incredibly low. The return is, I suspect that the advice you're getting makes more sense for the seller than the buyer.
Right. And I would like to reinforce the fact that the reverse mortgages, remember, are very, very expensive transactions. And they're exempt from high-cost loan regulations because they are indeed a very high-cost option for folks. All right? And to take out substantially, basically all that you can take out in a reverse mortgage in this fashion to purchase an annuity could be very unwise in the sense that you're going to, under those circumstances, you're going to get a lot less principal over a long period of time to utilize for yourself. You're going to also steepen the debt curve considerably under those circumstances as well. And that's a very, what we would consider an uneconomic and unwise position to take in that. And I would like to, again, reiterate that Tom's point about other kinds of options. For instance, there are conventional as well as some equity conversion type of quote-unquote lines of credit that make much more sense, that will only be basically, after the small transaction costs, only cost you interest or charges on what money you take down when you actually need it, which makes much more sense. And that gives you much more flexibility in terms of how you're going to utilize that asset.
Ms. Shepard is a divorced woman, 66 years old, and needs to retire because of ill health. When she does, she will no longer have enough income to cover her mortgage and other bills. She will be about $20,000 a year short. She has a plan to bring her lower retirement income and expenses into line, and that is to move into senior housing where her rent is 1/4 of her income. She has picked a senior housing complex in which she wishes to live, but they have a 2-year waiting period. She would like not to have to move twice and thinks that a reverse mortgage could cover her bills while she waits until she gets admitted into senior housing. Her condo is assessed for $250,000, and she has a $100,000 mortgage. She called one of those people that you see on TV talking about reverse mortgages and was told she could get a mortgage, but the upfront fees would be about $15,000. These would be added to the amount borrowed.
I
David
plan
again.
to pay off the mortgage within the next 20 to 24 months, but I think this is an awfully high price to pay for this loan. Is there another kind of mortgage that is available to me?
Well, the first question I would have is, would it make more sense, by looking at this overall, to perhaps go to sale as soon as possible, rather than incurring the cost? You're going to have transaction costs, you're going to have all kinds of additional costs, et cetera, to get involved in with another loan, and then you're going to be incurring that additional debt and reducing how much equity or residual you're going to get back when you make that sale. That being said, obviously, I think you're doing some very good planning in terms of, okay, I've looked at elderly housing as an option. There is unfortunately a waiting period. I would suggest very strongly that perhaps you should broaden your net in terms of where you're looking for that elderly housing, not just at one location or one elderly housing authority, but perhaps several, to enhance your ability, hopefully, to have an opening sooner than what you might expect. But given that, I would say that, okay, if there are no other alternatives at this point, and a sale you would like to stage or plan over a longer period of time for transition, that a term reverse mortgage probably would work wisely for you because it would be less costly. It would be a fixed interest rate, much lower transaction costs, et cetera. And you can certainly plan to, if you're going to do this over, let's say, a 3 or 4 year period, to have a considerable amount of equity left over after that transaction is over to carry you when you make that transition into elderly housing. It would make much more sense than, for instance, to do a lifetime reverse mortgage, because that's not your plan. Your plan is not to stay in your home for a considerably long period of time or a very long tenure. So why would you want to get involved with that kind of transaction, which gives with it, or comes with it, a great deal of additional cost and expenditure, and will obviously use up that asset in a much more complete fashion.
It's, you know, it's nice to, when people come in interested in term reverse mortgages, that they already have an end-of-term plan in place, which is any reputable lender is going to want to have a realistic one. And you're going to need steps in that end of term. It's not enough to say, well, I'll sell it when my name comes up. In today's market, you need to be thinking about when will I need to market it. And as you're taking this initial term reverse mortgage, this is probably the opportunity to, even though you're not ready to list your home yet, walk through with a realtor and say, what modest cosmetic changes are going to make this home saleable when I put it on the market? 18 months from now? Something like that, listing to, if you think your name will come up in a couple of years. Obviously, openings only turn up in senior housing when somebody dies or goes to a nursing home. So they can guesstimate when might be available, but they could be off by a length of time. So you need to have a long enough term reverse mortgage to accommodate that. You also need to be thinking about the marketability of your home in fairly short order. So walk through with a realtor, have them tell you what reasonable cosmetic changes might be. Factor that into your loan. Borrow a little. You're going to have to borrow $100,000 to pay off your mortgage anyway. You know, borrow 105 and replace the linoleum that has been flopping around for the last, or the window that's foggy, or hire somebody to do the brush. This is the time to do it. Avail yourself, because you don't want to have to put those kinds of loans on a credit card and carry it until you sell the house, because it's going to cost you a lot more. You know, the term reverse mortgage, you don't want to be profligate. You don't want to take out more than you need, but taking out less than you need doesn't make a lot of sense either. So be thinking about the process. When am I going to market it? How can I best market it? How long am I going to need? Can I control that by applying to additional places? All things to be going over with a counselor.
Thank you.
Right.
Len and Tom, just in general, how does someone figure out whether or not a reverse mortgage is going to work for them, and how do they avoid making that mistake?
Well, you need a crystal ball to avoid all of life's mistakes, but what I've always found, Jan, is that what you need most of all when you start thinking about reverse mortgages is someone who doesn't have a vested interest in the final answer, whatever that is. A lifetime HECM loan, a term loan, alternatives to loans entirely, selling the house. Sometimes it takes a cold-blooded assessment that says you can't afford to live here. You might like it, but we would all like to live somewhere bigger or nicer or more expensive than the hand that life has dealt us. So what you need is someone who doesn't have a vested interest in that to come down, sit down with you, try to place values on things that are hard to evaluate, like our emotions, because we're talking about our home here, and it's really important that someone who doesn't have those little marks in the cellarway where to see how tall their grandchildren were each summer they came. It's hard to say, I need to leave this place if you bring that to the table. You need somebody who can say, but let's talk about how much more you'll enjoy your grandchildren and children if you're not worried about how much hot water they're using when they're here because you can't pay the bill. You need to have somebody who can take that step back with you and share it with you. And I think that's the single best thing you can do, and that's the value of dealing with independent home counselors who don't have that product to push.
Right. You know, indeed, I think that's probably the most important aspect of our program, is that we're not going to charge elders a fee, and we're not going to get any remuneration or additional money back to us for whatever quote-unquote option or selection may come up. There is no way in the world we're going to have any economic advantage to the decision that an elder makes, and they have to make that decision as to what their own individual needs and circumstances are. Additionally, we're going to do this face-to-face in the home, because there is a lot of discussion and controversy about this, but we are adamant in saying that over the phone counseling doesn't cut what's necessary here by any stretch of the imagination. We need to see the elder in their home with family members, what kind of support systems, formal and informal, are there, what's the condition of the house. These are all important elements to get us to hopefully bringing the owners of the home to a point where they can hopefully make an informed decision which makes sense for them. That's what's necessary.
Who's responsible for the reverse mortgage after my death?
Okay, well, it happens all the time that people with reverse mortgages pass away, and in a lot of ways it's
Like with any mortgage.
Yeah, it's no different than if I were to pass away. There's a bank out there that holds a mortgage on my house. One of the differences, though, is that under no circumstances would a reverse mortgage be assumable by heirs. So
That's
in
right.
theory, if I had an 8% interest mortgage, which I don't, fortunately I've been able to refinance, but if I had something like that, it's not inconceivable that a bank might let my children assume that mortgage because they're not going to loan any other money out at 8%. Reverse mortgage, it has to be owner-occupied, so you do run into that. But it's a debt of your estate. Your executor, if you have a will, your administrator, if you're not, is appointed by the court, contacts the lender, and off you go. You sell the house and pay off the mortgage. You want to keep the house, then you can go, if you're able to as an heir, get conventional financing to pay off the reverse mortgage. The bank just wants it to be paid,
Right.
like any other mortgage. So.
And this is a unique class of loan. It's exclusively for the purposes of keeping an elder in their home. And again, as Tom noted, when you leave the home on a permanent basis, perhaps go to a nursing home or you do pass on, unfortunately that is a default. So the loan becomes due and payable at that time. So it's not assumable by anybody else, children, etc. That's very important to keep in mind.
But, depending on how much equity is left in the home, the bank will work with you if you put it up for sale and give them a listing agreement. If you've lived to be 104, much to their surprise, and you've already are substantially underwater, you're going to have to act a little quicker, but then it's not the asset that it used to be either.
That's right. That's right. But I think the big question here is not to confuse, because this brings up another issue, elder insurance, or insuring the elder to stay in the home versus lender insurance. And that is that there are lifetime open-ended insured reverse mortgages that have, like for instance, the HUD HICM program, which is a wonderful innovation, a great program, but what's happening here is that the lender is being insured in terms of the payment of the debt. They're guaranteed every cent. Could be 1,000 times more than what the house is worth. But there's some confusion out there because some elders think that I'm acquiring a loan that will ensure that I can stay in the house no matter what the circumstances, no matter how much it may cost. That's not necessarily true. What it means is that it's essentially, there's a formula that provides a certain amount of equity in each one of these cases, and that equity is going to have to hopefully fit that elder's needs. Because we're unfortunately these days encountering a number of elders who have gotten involved with these loans, and essentially they're in situations in which they have insufficient income produced by that loan to be able to pay for the necessities. Things like property taxes, hazard insurance, or even to meet their ongoing expenses. So that, in fact, they are being forced from their home. Now, the lender is insured, there's no problem for them, but essentially, is it going to be sufficient in terms of providing income to make it work for the elder? That's another set of questions. And again, that's why we have to get into a very complicated and very sophisticated analysis at the front end of whether this makes sense or doesn't make sense. In terms of reaching the home program, again, we have a 1-800 number, so it covers the entire Commonwealth of Massachusetts. So anybody can call at any time, and it won't cost them anything. 1-800-583-5337. I'll repeat that, 1-800-583-5337. And I encourage people not to hesitate to make that call.
Thank you to Tom Kozman, attorney at law with South Coastal County Legal Services, and Lynn Raymond, president of HOME.